All right, I'm done. I've had it up to here. I'm taking my $15,000 loss and I'm running with it. I'm taking it elsewhere. I'm taking it to greener pastures. I'm done. I'm done with Palantir. Is literally what everyone on Twitter is saying. Can you absolutely believe it? The Q2 earnings report, we'll get into a little bit today, was not that bad. Yes, I'm sorry for clickbaiting you. I get it. It happens. But you're already here, right? So just stay around. We'll talk about Palantir a little bit, and you'll probably feel a little bit better because everyone loves the carp, the carper guy, carpadoozle, carpe diem. You know, everyone loves him. So stick around. We'll talk a little bit about Palantir. I'm not selling. If anything, if it continues to go below 9 or even to the 8s, I'll probably continue to pick up more. My 3,400 shares are happy, fine. Yes, I'm still down 15 grand. It's chump change. It's not a big deal. We'll get through it. We'll get through it together. Okay. So let me transition this bad boy so you can actually see my screen, and we'll have a little screenception here. But the things I want to talk about, man, I think what people refuse to acknowledge, first and foremost, let's start off with the customer count, right? So I think people are seeing the customers go up, but they're not seeing their revenue go up. 80% year-over-year customer growth, which is absolutely phenomenal. If you're talking more specifically, just number to number, 169 to 304, that's impressive. 80% customer growth over the past year. I don't think people are recognizing it. Another important number, 42% growth year-over-year for the U.S. business. That's massively important as well. U.S. commercial revenue grow 120% year-over-year. These are just impressive numbers overall. Sorry, this is on a trailing 12-month basis, the 42%. On just year-over-year, it's 120%. It's impressive, right? I guess people are upset we didn't get to 500 million. I get it. Currency headwinds, there's going to be probably 10% impacts associated with that for the international business. So is that 10 million, 20 million? I don't know. Regardless, there's going to be an impact associated with that. But I want to get back to what's important, which is the customer acquisitions, the 80% year-over-year number. And why this is important, specifically to me, because I understand this, I've gone through this, I've worked with Palantir when they were establishing our business with them in 2016. I get it. I understand what they're doing, and I've seen it in action. They have what they call an acquire phase. They bring a bunch of data analytics folks, software engineers, a bunch of just really smart people, smarter than me, obviously, and they embed themselves into your business, say, how can we help you in the best way create a software, whether it's through Foundry or Constellation or whatever other sort of software. But for my particular case, it was through Foundry, and they asked themselves, what are you trying to solve? What do you do on a day-to-day basis where we can basically allow you to utilize our software? We can build it from the ground up to allow yourself to not have anything sort of just like off the shelf made for you. They spend this time for 6 months, a year, embedded in your business, understanding what you're looking to do and building a software package around that, having specific applications that you can build and an operating system put in place in front of you and literally building it from the ground up there. That takes time. That takes Palantir's time and effort and money. And that's what this slide is showing here. It's their acquire phase where they're specifically embedding themselves. In this particular case, we're making barely any revenue, $600,000 worth of revenue in 2019, and lost $65 million in these acquire phase sort of businesses. And then when we get to the first half of 2020, you're seeing you are actually getting some revenue coming from those same businesses, yet they are still losing money. So I don't think people understand very early on when they do business, they get a customer in the business, get a customer in the door. It doesn't immediately start contributing revenue right away. They acquire, they have to put themselves and embed themselves to the point where it's only after some time where you actually get into the ability to start developing the programs and the applications that they're going to be using, and then they actually start using and getting the actual revenue coming from it. And that's where you get into the expand phase, where they actually have the ability to start getting revenue from the customer. They're using it. And what you're also acknowledging is, how much of a contribution margin is this considering or continuing to provide to the bottom line, you're actually, yes, getting revenue, but you're still investing into that particular business. You're still getting them to develop and expand how much infrastructure they need and how much actual database and applications, and you're still kind of consulting with them to build and figuring out how's it working and doing checks. I remember doing that 2 years after they had initially came. Microsoft doesn't do that. Amazon doesn't do that. So it's impressive that they stuck with us so long to be able to do that in my experience, and they're still losing money in that. It's not until you kind of get a year on after that where they actually start making a little bit of money, and that's what this is kind of showing, that 35% contribution margin. We're actually getting money. And it's not until you get to the scale phase where they say, okay, you have the applications, you're up and running, you know, you're mobile, you don't need to be babysat anymore. And so this is showing the revenue coming in. Look at the contribution margin, above 80%, right? That's where your gross profits are getting to the 80% margin range, 81% margin range that we're seeing. Granted, these are older numbers. This is 2019 and 2020. But you think you're spending money early on, so it's not why you're seeing the 90% gross profit when you look at Palantir's financials. It's because you're investing in the acquire phase, and you have the expand phase, and then you get to the point where you're scaling. They're continuing to add little modules here and there, tweak what they're doing, but at the end of the day, you've kind of built out that system for them, that operating system for them around their data analytics, specifically for Foundry I'm talking about because I have that experience. And that's where your money truly comes in. It's quite impressive. And so going back to this customer piece, now we'll go a little bit more into the financials, which I thought was impressive, and you'll see what I thought was not so impressive about 2Q, was this 80% growth in customers year over year. The revenue has really yet to hit the bottom line. And if it has, it hasn't really hit that contribution margin that you're expecting. But yet, margins were still like 80%, 81% for Q2. So it just goes to show you how many new customers they've brought on, but yet have yet to probably invest too much into or have yet to really start getting scale from. And that will be something that comes on down the road. So actually getting to the highlights, I like this slide. 304 customers, up from 169. That's the 80% we talked about. The trailing 12 month of 42% growth. I like that. But actually getting in, I thought these slides are pretty cool. And I think a lot of people don't spend a lot of time on this total addressable market slide, but I think it's also pretty awesome to look at, looking at the different products that they've rolled out over time. But people don't generally look at that. They more so are just saying they don't release any new products and yada, yada, yada. But here they are. You know, here are the different products that they've released. Are you particularly using them? No. But I think one of the cool slides that I did have, what I accidentally closed, was the industries in which Palantir has been involved in since 2008. So they were in police stations, and they were in Department of Defense, and they've slowly built in. We're in like the 2016 timeframe, or sorry, 2012 timeframe. They added oil and gas, or maybe it was 2013 or whatever. They added the aeronautical business with Airbus, and they've done Ferrari and all these different businesses that they're in, industries that they're getting into, and really just getting to the point where they're starting to scale their customers, which is the 80% year over year. But I thought this was also impressive. The 45% year over year growth in the US business alone, which I thought was impressive. And that was obviously hindered by the 13% that you get from the total government revenue, which ends up being less than 30%, which everyone freaked out about. It was less than 30%. But you have to realize the salespeople aren't really going after the government. They're going after the total commercial revenue. And then specifically, and that's that 26% everyone was upset about. Net dollar retention, 119%. That's not too bad. 80% customer growth. Yes, yes, yes. Revenue per customer up 17%. Love to see that. Billings, remaining deal value. Love that. Gross margin. Love that. Yes, trailing 12 month, 41% growth since 2019. Really enjoyed seeing that. The 42% year-over-year revenue growth. Love to see that as well. But what was the thing that I truly liked? Oh, the U.S. commercial, right? Up 120%. That was on the highlight slide. Love that. You're continuing to see year-over-year continued triple-digit percentage growth from 34 customers just over a year ago to 119. That's impressive, right? And I don't think people are recognizing that at all. And the U.S. commercial revenue is barely even touching the surface of growing. And so you think about what we just talked about. You have 34 to 119 customers. So almost 90 customers, 85. I'm not good with math. You know that. 85 customers that truly have to get into that acquire, expand, and then scale phase. And where are they? I don't know. But I'm sure not all of them are in the expand and scale phase. And that's what I'm saying. Palantir is investing in those businesses. And you have yet to see the revenue come through. The government piece, that's where a lot of people got upset about. It wasn't the 30% or 40% that they were expecting. It was 13%, which I understand. So yeah, quite disappointing. Although trailing 12-month revenue per customer goes up 9 million to 10 million. So a 10% increase there. But cash flow from operations still looking pretty good, 62 million. And then if you incorporate share-based compensation, you go from the 370 gross profit, adjusted gross profit of 381, and then you include the share-based compensation, and then people get upset because you end up losing a little bit of money. So you end up losing about a penny per share. But if you kind of remove that stock-based compensation, then you're still making 107 operated income for adjusted. But of course, you have to include share-based compensation, which is where the negative comes in. You lose 145 million right off the bat. And that's what upsets people, is in actuality, you lost 41 million from a GAAP basis. But if you talk about what's actually coming into the cash register, which is why they have zero debt, they continue to increase the amount of cash on hand, the 145 is what you're looking at. Or sorry, the 100 is what you're looking at, not the 145. The 145 is made up through shares that just magically get created. And yes, I understand that's slight dilution, but at the end of the day, they're still making money. So yeah, that's where you end up with. And I honestly didn't think it was that bad of a quarter. You're still up from 375 to 473. That's pretty impressive year over year, regardless of what people think. So, yeah, I'm honestly not too upset. I think what upset me the most, as did with everybody, is the government 13% growth. But I remain cautiously optimistic because I have seen the agreements signed and extensions from the Army and things of the like. And so are we truly realizing all the revenue coming through as of yet? Or because there was a slight slowdown, will there eventually kind of be, there's a trough right now, but will there eventually be a peak again where we continue to grow that government revenue year over year? That I don't know. You have to think, 2020 and 2021 is a big deal for government revenue growth because of what happened during the pandemic and being able to help in the UK and the US with the CDC. That was a huge contract for them that flowed through, grew revenue very quickly, and now you're being normalized for that. And I don't think people recognize that. The same thing's going on at Google, Amazon. So the fact that these companies aren't having anemic growth is quite impressive as some of these pandemic revenue streams kind of fall off. So it goes to show, in my opinion, the impressiveness of what you're seeing in some of these businesses, the Googles, the Amazons of the world, as most e-commerce trends and most all these other trends are rolling over and going back to the mean before they kind of level off and start going on to the normal trend that we were expecting with globalization and things of the like, which is also challenged now, which is because of what's going on in Ukraine and Russia. That also helps what's going on at Palantir, and especially what's going on between China and Taiwan. That also would help Palantir as well. So I just encourage folks to, yes, keep an eye on it. I had some really good conversations with Sachin on it and Chris the other day before on Friday before the earnings call, and then I watched them, kind of go through the earnings call with everybody in live stream. They had like over 800 people, so congratulations to those guys. Hugely beneficial and hugely watched stream. But I'm cautiously optimistic. I think people are expecting the 30% year-over-year growths immediately, and I think what you're going to end up seeing is peaks and troughs, man. Like, over the course of the 4 to 5 years that Carpe Diem is talking about the 30% growth, this is going to be a lull year. You're coming off a very strong 2021 and 2020 as well. This might be a lull year, and we invest through that. We hire more people, the 25% headcount increase. We continue to acquire the customers, and the revenue is going to continue to fly up in masses. So I think it's not anything where you go out and screaming buy. I think if you have an opportunity, you don't have a position, this could be a good opportunity. Limit your exposure. When I say 3,400 shares, that's a lot to some of you. It's not a lot to me. It's a very small portion of my portfolio. It's less than 5% of my portfolio. So please be cautious. While Palantir is my number one conviction stock, it is not by any means something that you should throw half or 100% of your money in and come back down the road and get upset. So I'm cautiously optimistic. I think by the end of the year, we'll have not a trailing 12-month $2 billion, but I'm anticipating we'll get closer to that $2 billion full year revenue mark than we anticipate, unless the dollar continues to get stronger. But you have Google partnerships now with their cloud business. You have a lot of catalysts that have yet to flow through. And I think that we're being impatient because we're used to these large increases, 30, 40% year over year. And because we're a smaller company, meaning Palantir's a smaller company, they anticipate it's going to grow forever. I'd say be patient. And the sales team has just started getting ramped up. And I think that that's in its infancy. And I think you will soon see that fall through. So thank you. Hope you guys enjoyed this. Let me know what you think in the comment section down below. And I'll see you guys on the next video. Cheers.